Thank you for joining us for Cherry Becker's 2023 Government and Public Sector Virtual Conference. My name is Danny Martinez. I lead Cherry Becker's Government and Public Sector Accounting Advisory team. Most of you have been with us through our first two sessions this morning, and we are thrilled to see you here on session 3 of our virtual conference. We're halfway through our first day of presentations, and we will be offering up to 1 hour of CPE per session. Each session will be led by professionals who share tools, tips, and actionable techniques regarding these topics. So on your screen now, you see some things we want to talk about before we get started. To receive CPE credit, you must answer at least 3 polling questions and attend for the full 50 minutes. CPE certificates will be issued via email within 10 days. If you have not received yours after 10 days, please email cbhlearning@cbh.com. A recorded version of this webinar, along with a copy of the PowerPoint slides, will be available in about 1 week and will be sent via email and posted to our website. If you have any questions during the webinar, please type them in the Q&A window located in your control panel. We will either answer them during our presentation or respond to you directly afterwards. Just a quick note, a short survey will also be posted at the conclusion of the webinar. We value your feedback and ask that you take part. And with that, let me introduce our speakers. We have ARPA Bhattacharya, who's the Government and Public Sector Managing Director, and Nikki Latini, President and owner of Capital Accounting Partners, LLC. ARPA, take it away.
Thanks a lot, Danny. We're very excited to be in this presentation and talking about the finance function of the future and the importance of cost allocation and indirect costs. So why are we, this is our agenda today. Why are we talking about this? What's the importance of that? Change. How fast is change here? The future is now, and we'll talk about that, explain what we mean. How do you get there to the future of finance? And the importance of knowing your costs before you can think strategically. You'll see we've popped up a poll. Please take your time over the next minute. Tell us what you think. What type of organization do you want to be? You'll be only able to click one option. Are you comfortable being tactical and focused on daily operations? If not, you'd like to adopt best practices and leverage predictive analytics. And as we go through this presentation, you'll see we have a maturity model that talks to daily operations and being tactical and remaining there, and then transitioning to the future of the finance function. So why are we talking about this? There's trillions in dollars in grants and funding that come to state and local government. That also includes revenue from fees, user fees, taxes, etc. With that comes a responsibility for accountability and understanding the costs for running these wide variety of programs. Important to that is managing the budget cycle and costs at the same time. These are two tracks that usually run in parallel, but then it's critical to be able to manage both at the same time. And then, of course, as you see, there's rapid changes in technology and the financial environment today. So that's the burning platform, which is why we're having this discussion today. Consequences of not being ready for change. These are examples from our world, obviously not just government. So Borders wasn't ready for online book selling. Tower Records wasn't ready for digital music. Kodak Film wasn't ready for digital photo, and obviously Blockbuster wasn't ready for streaming. And they all went out of business just because they didn't believe that that change and the future was here now. Many thought leaders over the past few hundred years did not believe change was coming. Here's Watson, the chairman of IBM, who thought there's a world market of maybe 5 computers. Then there's Ken Olsen, who thought nobody needs a computer in his house. And then typical tongue-in-cheek William Preece from the British Post Office said, the Americans have need of the telephone, but we have plenty of messenger boys. Here's Mr. Edison. Fooling around with the alternating current is just a waste of time. Nobody will use it, ever. Next up is the president of Michigan Savings Bank, who's advising Henry Ford's lawyer not to invest in the Ford Motor Company. Why? Because he thought the horse is here to stay, but the automobile is only a novelty. And then here's my favorite, Mr. Charles Chaplin. Who the heck wants to hear actors talk? Ignaz Semmelweis, the Austrian physicist, who advised nurses to wash their hands and prevent infant mortality and maternal mortality. People didn't believe him. He was sent to the lunatic asylum, went crazy, and died. So change is here. It's here now. As you saw, people weren't ready for change, and it was here already. There's AI and ChatGPT. Just over the past 3 years, look at the dramatic changes that we're facing. The pandemic response, the push for integrating environment, society and governance, and social unrest. Look at everything that's happening around us. Thank you for that comment. So, innovation. Alvin Toffler in 1970 wrote Future Shock. In Future Shock, he says, we aren't ready for the future. It's already here, and we are too shocked to be able to adapt to it. And he said, if you don't have a strategy, you're part of someone else's strategy. And that applies to the finance office today. The future is now. Previously, we used to look at what happened, historical analysis. Now, we need to be able to plan for the future. How do you use the data that you have today to be able to plan for the future? We need to be able to move from an organization that's purely transaction-based to one in which data is used to make decisions. We need to reskill the workforce, leverage automation, develop innovative strategies, and most importantly, deliver the highest level care to our customers, the public. How do you get there? This goes back to everything we've been talking about. You cannot innovate, you cannot go to the future without understanding the full cost or the true cost of one's operations, to which indirect costs are critical. How will you budget or manage finances without knowing the cost of running your programs? So what is the finance function? It includes this whole list of things that you see, and we wanted to list it out so you're comfortable understanding and knowing that all these elements are included in the finance function, from compliance to internal audit, etc. This is the vision of the future, which will lead us to the maturity model. Obviously, organizationally, one would want stewardship, operational excellence, and leadership and strategy, and they all integrate. You want to be sure as a steward of the business, as the CFO, as the Office of Finance, you're focused on compliance, regulation, etc. Operationally, you want to be sure you're closing the books, you're budgeting, your processes are efficient. And in terms of taking the finance function forward, you want to be focused on performance management, strategic planning, manage risks and opportunities, and critical to this, the enablers are the people having the right people and having the right metrics. So these are questions that should be considered. What is the vision for the finance office? What role will finance play in the business? What types of reports are important and who are your stakeholders and customers? And do you have the right people and the right skill set and the right culture? Process and controls, who's responsible for what and how do you manage risks? Systems, what systems are required to support finance and are they interacting correctly with other systems in the business? And how should the finance organization be structured? Is there a need to restructure it to make it more efficient? And here is the maturity model that we'll reiterate towards the end of our presentation again. There are 5 levels in this maturity model. Typically, agencies and organizations in the state and local government, as well as in the federal government, like being in one of these levels. There is no need to go from level 1 to level 5 in the next few months. It is what the organization is comfortable being, where it's comfortable being at. Maybe you're comfortable being at level 2, where you support the business. You just do initial financial analysis. You recognize the advantage of having a strong finance function and manage finances accordingly. Or maybe you want to mature from level 2 to level 4, where finance is integrated with all your different departments and divisions. It's forward-looking so you can plan. Or maybe you want to go to level 5, or you're already at level 5. Finance is totally forward-looking with performance management integrated into finance. Senior leadership pushes forward with a culture of a proactive approach. Again, entirely upon the finance organization to decide where you want to be. But you cannot decide where you want to be without knowing what the different levels are, and more importantly, without knowing what the true cost is of running your business. Do you have a cost management function in your agency that helps you understand the true cost of your agency, of your function, of your division, of your business? You do. You're not sure what that means, or no, you would like to learn more. So this is our second polling question. Please take a minute and choose one of these options. If I could ask our team at Bekaert to look into this, there might be some people who are unable to answer the poll.
Arpan, there's a question in the question and answer of how often should we be asking these questions?
At least annually. This should be part of the strategic planning process, where you review the maturity model and where you want to be.
Great, thanks.
Thanks, Nikki. That's great. Just to learn, over a majority of our participants have a cost management function. Nikki, over to you.
All right, thanks, Arpan. So why are we talking about all this in the finance area and all of that? First and foremost is understanding the importance of your cost and cost allocation in order to get to where you want to be. So one of the things I find is that what are the hidden costs? Why do we not talk about them? Why do we think that they don't exist? So indirect costs are the ones that are not readily available. And that creates an issue when looking at what is it costing you to support all the programs that you are doing. This is regardless of whether or not that program is funded by a grant, but you have services that you're providing, all of those things. So if we don't understand what those costs are, if you don't know, then we can't be sustainable and we can't be strategic about the different programs that we're looking at. And it means that the general fund is subsidizing all of those things. So one of the things that I think is most important, if you take anything else away from this conversation today, is that indirect costs don't exist without the need to support direct costs, and direct costs cannot exist or operate without the indirect costs supporting them. So we really need to look at what is the true cost of our services. One cannot happen without the other, and we need to focus on true cost of service and looking at that. I always, I've been doing this for 22 years, and all I hear is the differentiation between direct and indirect, but that's really not the way we need to look at this service and what we're doing. It really is, what is it costing us in total? And that's how you can make better decisions to move forward and how you're going to look at it. So what is a tool that we can use to do that? Cost allocation plans. It's really that 30,000 foot view of what is it really costing you to support all programs and services within your organization. We're not just differentiating. It's not just important to know, okay, if we take on a grant, what are those costs? Or if we provide services to the public, what are those costs? This really gives you that one document where everything is in one place, and you're able to then look at, this is what it's costing us to do these services. So we look at the central support departments, and those are those finance, HR, IT, facilities, all the ones where their primary focus is to support all of the departments, programs, services within the agency. And then the receiving departments are just the ones that are receiving those services. So we can differentiate those, and the cost allocation plan will do that. So here's another polling question. When's the last time your government calculated a cost allocation plan? In the last fiscal year, in the last 5 years, never, or you're unsure. So a lot of times, if you do have one, if you're not directly involved with it, a lot of organizations don't circulate this information. So that's why it's so important too, is that everyone gets involved in what is it taking you to provide these services? Because if you do it in the finance department in a little corner in the budgeting office and it's never talked about and it's not looked at, it's not going to service anyone in those operating departments because they're not going to know. So it's unbelievable to me how many times I hear like, I don't know if we have a cost allocation plan. I don't know if we have an indirect cost rate. I've never, talked about it, or it's just some line in your budget and you have no idea how it's calculated. So it really is important to ask, to find out. And as an organization, if you are that group that is doing the cost allocation plan, share that information. The more people that know and understand, the better you can utilize it, leverage it, and maximize your opportunities in your organization. Okay. See, unsure is the largest percentage. 45% of people don't know, and this is so common. So don't feel bad if that's the case, but hopefully through this process, you'll now see the value and importance of understanding, learning more about it, even if you're not directly involved with calculating it. Okay, so here's some different uses. We do 2 different types of cost allocation plans typically. You have a full cost allocation plan and you have a 2 CFR Part 200 cost allocation plan. The full cost allocation plan is what you want to use for all of your services, like user fees. You're charging that, the developer that's getting a permit. Then also your utilities, your enterprise funds. What are they charging? What are their rates for the consumers? Those are all related to your full cost of service. Now, we follow the same methodology as we do in the 2 CFR plan. The only difference is with 2 CFR, that's the guidelines of how to, calculate this indirect cost rate and what's allowable. So it's a little bit more conservative. It brings you, you look at the previous year's information to estimate for the future. Whereas as we were talking about with the finance functions, it's so important to look forward. So in the full cost plan, we're usually using a budget and looking forward to say, what do we anticipate to be happening in our organization? So many of you guys know that in the last couple of years, it's been those interesting years with COVID and all of that. And then we have all this ARPA funding. So with ARPA, it's amazing to understand, what the impact of that is in your organization. And without a cost allocation plan, you cannot know that. So many people are looking at it as, wow, we can do all these projects that we have on our docket, but we haven't been able to do because we didn't have the funding. But do you know what it's really costing? So are you going to actually put your general fund in a deficit because you have not taken into account what it's really costing you to supply or to put on these new projects and programs that you're working on? So pay attention to that and understand what it's costing you. So then the next step after the cost allocation plan is the indirect cost rate proposal. What this is it translates the cost that you get in the cost allocation plan, that is your central support indirect cost, your agency wide, and brings it down. You add your departmental indirect cost, and you now have a percentage. So that percentage is what you would apply to every direct dollar you're spending. Sometimes, depending on your denominator, it might be just salaries and benefits, and other times it might be total program costs. But either way, on the dollars that you spend directly, this tells you how much it is indirect to add. And so what that encompasses is, now you can understand, if I have this 30% rate, so that means for every dollar I spend, it's 30 cents in indirect. That's really what I need to be looking at in order to do my budgeting and my strategic analysis, and should we take on this program and all of that. Then many of you might have heard of the NICRA. So the NICRA is just that indirect cost rate, but it's been negotiated by the federal government. And this is what allows you to then apply that to grant funding, allow the federal government to reimburse you for those services. So again, back to my true cost comment about one can't happen without the other. Understand this, there's definitely a perception out there of we want all the dollars to go to the grant. We want everything, we want all the dollars to go to the program that we got. And people are very tight with the money, and they don't want to apply the indirect costs because they think that means that they're not putting all the dollars in the program. So what I want to also reiterate today is understanding this. The cost exists whether you acknowledge it or not. So everyone wants their paycheck, right? Everyone wants to be paid for their services. So if they're working on a grant and these direct people are supporting the grant and doing the things on the front line, they're expecting a paycheck. That paycheck is part of the indirect cost. So without it, they don't get paid. So to me, I can't look at that as we're not putting all the dollars to the program. No one can operate without our computers these days. You need a place to be. And so there's facilities, all of those things exist. So if you're not acknowledging it in a grant, then guess what? Your general fund is subsidizing it. And that means your taxpayer dollars. That means that what was anticipated to be using for those general fund dollars is no longer available because you're subsidizing these other programs where you could be getting that reimbursement back. So it's thinking about those things, looking forward for your finance department, really doing that necessary work to make sure you're sustainable and that all dollars that you were able to do is available. And there's a question in here, can a NICRA be entered into at any time, or does there need to be a qualifying event that makes the entity eligible? That's a great question. It does not take a qualifying event. At any point in time when your organization decides, I want a NICRA, you can go and do that. So that's a very important comment, because you want to make sure you always have a NICRA. That's a really important thing. And understand that depending on whether or not you have $35 million in direct federal funding is the time when you actually need to negotiate it and go through that process. And sometimes people are really scared of it at first. Once you get through that first year, it's a lot more streamlined. But if you have less than 35 million, then the guidelines state that you do the rate according to the 2 CFR and you put it on your shelf, and anyone who asks for it will get it. And they can, if they want it to be negotiated, then they're required to negotiate it themselves, not your cognizant agency. So there's a lot of information on that we can go into later, but that's a great question. So this is a little older. It's a few years ago prior to COVID funding, but I want to make something really important, or make a statement that I think is really important to understand. In grant funding, we receive all these grants, we have great ideas, but for whatever reason, resources, timing, whatever it might be, we don't maybe all fully spend our award. So there's so many dollars that are left on the table that you were awarded and that are really yours. So now's the time, get a NICRA, leverage those unspent dollars. You can go back 2 years and you can say, I had this grant, I didn't spend all my dollars, and I didn't apply indirect cost. So now I'm applying the indirect cost, because the idea behind it is it might be closed for direct cost. You no longer spend any more direct cost against those dollars because the grant year is ended, but you already spent the indirect, you just didn't apply to get the reimbursement for it. So now you can, if you have an NICRA. So the other thing that's really important is that with the NICRA, this is under the 2 CFR. It's one of the new guidelines that came out when the updated 2 CFR came out in fiscal year, I think 15-16. But basically what it allows you to do is use your indirect cost as your match component. So this has been a major thing for people because of the fact that you now have the opportunity to have a NICRA. And once you have that NICRA, you can go after more grants that you might have had to pass up because you didn't have the cash in hand. This is the federal government's acknowledgement that indirect cost does exist. They know that. So they're saying, use it as your match. So what that means is when you apply for that grant, if you have a NICRA, and let's say your NICRA is 33% and your match requirement is 25%, you can now fully cover that match with your indirect cost rate. And then any additional dollars you can still pull down up to the amount of your rate, the 33%. So it's so important. And a lot of people also, they'll do their indirect cost rates and they're terrified by how much it actually is, the rate. And they're like, we can't do that. They're never going to approve that. The idea behind it is that the negotiators are not there to say what your rate should be. They're there to say, did you follow the guidelines? Did you do what you needed to do? And then that is your rate. And I always recommend put in your full rate. You have the option as an organization to not charge your full indirect cost rate. So let's say your indirect cost rate is 50%. If it's 50%, negotiate it at 50%. That allows you to leverage it in more places. However, you can pick and choose what you want to charge the grant as long as you don't charge more than the 50%. So a lot of people think that if I submit this NICRA and it's 50%, I have to use it across the board. And that is not the case. So you can make a policy decision that says, you know what, on this grant, we're not going to do anything. On this grant, we're only going to collect 25. The idea is that if your rate really is 50%, then you're not fully collecting if you do anything less than. So that's, why they do that. Another question, what determines the agency is going to be your cognizant agency for NICRA? Is it the biggest funder or your programs? That's a great question too. So your cognizant is determined by your largest funding source. So if you get the most amount of money from HHS, then that's going to be your cognizant. That doesn't mean that you have to negotiate rates with different federal agencies. They are required to negotiate on everyone's behalf. So you submit a rate to HHS, you can use it on HUD, you can use it on EDA, you can use it on Department of Labor. So that's something to keep in mind as well. And does the indirect cost work for FEMA? Absolutely. Actually, FEMA is one of the best ones that recognize indirect cost. They've brought me in a lot for doing training specifically on indirect cost and programs to help their recipients understand it better. They're a fabulous organization that really recognizes indirect cost is very important. So yes, you can use it on your FEMA. All right, you're still okay on time. All right, so indirect cost and fiscal recovery. Tailoring your cost plan to meet the requirements of ARPA and grant funding. So as I had mentioned before on the ARPA and understanding what it's really costing you to provide these services is just crucial to doing that. So tailoring your cost plan, what I mean by that is just recognizing and putting in there, you might not have spent those dollars yet, but putting in the cost plan, the potential or the forward thinking projects that you anticipate will help you to determine your indirect cost associated with that. It's very important to know that. I have an organization, a very large tribe that received $100 million in ARPA funding. And they just thought this was the greatest thing. They have all these projects, all this stuff. So when we went in there and I looked, their rate was 33%. And so I looked at them and I said, no, 1 billion, excuse me, I'm so sorry, 1 billion in indirect cost. I mean, in ARPA funding. I was like, wait, it was a lot less. So yeah, 1 billion in ARPA funding. And they just had this long laundry list of projects that they wanted to do. And so I sat down with them, we figured it out. And I said, okay, It's approximately $300 million in indirect costs. You have to hire more people to cover the amount of effort that you guys are putting out there. And so do you have that in your general fund? Because they did not account for indirect cost at all. So $300 million all of a sudden in the course of, let's say, 4 or 5 years that they're going to be doing this is a lot of money to just subsidize. So without knowing that, and I said, okay, well, let's tailor down the list of projects to make sure that you can cover them with those ARPA funding as well. And now you really do get to do all these projects, but you're not doing 100 projects, you're doing 75 or something like that, so that you understand you're not putting your general fund in jeopardy just to be given this money. Sometimes it costs more to get money than to pass up on it. And so without indirect costs, without cost allocation, you don't know what that looks like as an organization. So keep that in mind. All right, our next polling. Do you apply the indirect cost rate to your grants? Or how do you apply it? Do you have one? Do you have a negotiated indirect cost rate? Do you use the de minimis? Not one, you don't have one, you don't use it, or you're unsure. And so the de minimis we haven't talked a lot about, but that was something that was put into the 2 CFR. Some of you might have heard of it, that just says without negotiating anything, you can use 10%. Again, that was the federal government's acknowledgement of indirect costs. However, they had no previous information, no data to understand what is an average indirect cost rate. So one of the things with the de minimis is it's based on a modified total direct cost. And so that means you can't apply that 10% on everything. So you're really not getting 10%. So I think it's a good first step, but I don't recommend it because it's not, one, it won't tell you what you're really spending. It won't tell you what's happening out there. It just allows you a little opportunity to get a little bit more on your grant, but doesn't really give you that answer. So make sure you understand that if you are going to use the de minimis, that you are working your way towards doing an ICRA. Okay. All right, again, there's the unsure. I definitely understand this, guys. Indirect cost is one of those things that so many people try to avoid. It's not that perfect fit in the box, especially for us finance people. We like everything to fit. It needs to be exact, it needs to be to the penny, and it needs to be all those things. So indirect cost is sometimes very hard to comprehend and understand. And so it usually is done in a silo off to the side. So my process that I've gone through over the last couple decades that I've been doing, I've done over 800 cost allocation plans. I've done all of that. And it's so consistent across the board how many organizations don't know anything about a cost allocation plan, but that doesn't necessarily mean you're not doing it. So that's something to really make sure is important to understand, and that you be an advocate, you push to understand more, that you want to know, because that's how you leverage that, and that's how you do better in budgeting and in your fiscal responsibility. Okay, moving on. Don't try this at home. Well, if you look over here on the right-hand side, the thing is cost allocation plans and indirect cost hit every level. So it's not just you as a subrecipient receiving dollars. The grantor also has indirect costs. So what does that look like? The federal government is expecting everyone to understand what it's costing you before you grant that dollar to a subrecipient and all of those things. So the more you know and the more fiscally responsible you are by understanding what your full costs are, the better you're going to look to a grantor. A lot of people think that you're not going to be competitive if you have indirect cost. That is completely the opposite. A grantor is responsible for risk assessment and all of that of their agencies they're providing dollars. If you don't know what it's really costing you, then you can get to a part where you're no longer able to actively work on that grant, and then they're responsible as the grantor to do that and to be responsible for those funds, whether or not the people they gave it to was. And so it's really important to understand that it hits all levels. So why indirect costs? Cost recovery, fiscal management, compliance, increased revenues, match requirements, all of those things. So cost recovery, we've talked about this, and what is the real cost of these services? Do you know what it's costing you to provide them? And making sure that you understand to be financially stable and to be sustainable as an organization, you have to acknowledge what these dollars are. You get to make the decision of how you want to apply it. If you want to subsidize it, all of those things, that's your choice. But know what the costs are. You have to know what the costs are. Then we have improved financial management. This allows you, indirect cost and understanding it allows you to make those decisions, to understand what it's costing, to be more fiscally responsible, and to make sure that the funds that are coming into your organization are used for what they're intended for. So I mentioned before about the general fund subsidizing these programs. If they subsidize, that's less money that's in the general fund to do public safety, parks, all of those things that the taxpayers are paying for. So is it financially responsible to not acknowledge that, go on to take these other programs and use those funds for what they were not originally intended for? Sometimes it is, and again, that's the decisions you want to make, but know what those costs are. Compliance. Failing to collect your indirect costs can put your organization at risk for non-compliance and your future of funding opportunities. So in the 2 CFR, it talks about indirect cost and why you need to know what that is. But there are many times that I've seen that organizations or recipients, as they're doing if the grantor is doing their risk assessment, one of the risk assessments relates to indirect cost. And without indirect cost or knowing it, it becomes an audit issue. It becomes an issue that says, we're not representing what it's costing here. You need to do an indirect cost so that we can be sure that you are going to be able to do what's expected of this grant and that you're able to do that. Increase your revenues. So again, as we talk about, you might not necessarily think about indirect cost and revenue in the same sentence, but what you have to realize is that, like I said, on those unspent dollars, if you have grants that you were awarded, you didn't fully draw down on them, those are opportunities that you have to grab dollars to bring back into the general fund unrestricted. So kind of like a revenue, it comes in because you already spent it a couple years ago or last year. You already subsidized it. You already did. So it's unanticipated dollars into your general fund to use as you see fit, because they're no longer tied to those grants because of the fact that you already subsidized it. You already technically paid for those dollars. So you want to make sure that you leverage whatever you can to get that. And then there's match requirements, making sure that you have an indirect cost rate so you can get as many grants that you can related to grants that have match requirements. This allows you to leverage that and you don't have to put the cash aside. So that's something that's a really big thing for a lot of people. It's kind of a win-win on both sides. The program people that are working on these grants are happy because they feel like their costs they're using the dollars that they were awarded for the direct portion. And then the indirect portion is the cash that you no longer have to put aside. So it really gives you that idea. So then on ARPA, we all have deadlines coming up. I know that many organizations have come to me to talk to me about the fact that they are struggling to make sure that they obligate all of the dollars by 2014, and then you have to spend by 2024, and then that you spend it all by 2026. So they're worried that, they have this long list of projects and they want to access them all, but you have these deadlines you have to accommodate. So use your indirect cost. You have done programs and projects already and using ARPA funds, but if you didn't collect indirect cost rate, apply those indirect costs, bring them back into the general fund, And then once it's in the general fund, if you want to send them right back to that program, go for it. But now they're spent, if you will. And so you don't have to worry about them taking those dollars back. So that is something that's really important. Okay, there's a question. Can indirect cost applied under NICRAs or the 10% rate be acceptable for financial reporting purposes? I'm not sure I 100% understand the question. When we talk about financial reporting purposes, are we talking about the fact that what you apply on a grant, let's say you're trying to get reimbursement for it, then you do the NICRA or the indirect cost rate and you apply that dollar amount? The answer is yes. Also, I know that if you have an indirect cost rate, and let's say you are wanting to charge for services for the police department to have officers at a fair, let's say, you can use that to charge out to determine what those costs are and what you should charge. But what would be reported in the ACFR is the fact that those dollars, before we get to the indirect cost rate or the cost plan, are already in your finance department, your HR department, your city manager. So those are how they're shown in the ACFR, is at the department level. What we then do is translate those costs into a rate, which you can then apply to charge outside. So when you're going to charge those programs to services you're working on, that's how you recognize that. But as far as how they're recognized in your financial reporting, you're doing it because your costs are already there, and we're using those costs from the ACFR for finance, HR, all of those, to determine what that rate is. So I hope that that makes a little bit more sense. And I've already talked about this before, is using those taxpayer funds to support these grants was not the way it was intended. So we want to make sure that we're doing everything. We're in a fiscal, we're doing it and being financially responsible and all of those things. So circling back to our financial vision of the future and targeting the operating model, this is how we get there. This is the step that's so critical to being able to operate at this level and showing operational excellence, leadership and strategy. And how do you want to operate as an organization? So these are the things as the enablers that we use these tools and techniques to be able to achieve this goal. And the financial maturity model. So starting at the basics, moving our way up by looking at things and the business supporting, and then aligning. As we look at level 4, and it talks about finance integrated with the business. So what does that mean to you? Means that, you know, much like we were talking about in these poll questions, how people are not, don't know anything about whether or not we have a cost plan in our organization or not. This is what you do. Bring everyone in, operate. This is an organization. A lot of times people are very territorial on their funding in each different department or each different services they're performing. Understand, you guys are trying to create operational excellence across the board as an organization with everyone. So how do you do that? You bring everyone together to understand the costs. The decisions are made by knowing what those costs are. And then you can get to level 5, optimizing all the things that you need. So that's what you want to do. I'm trying to see if there's any other questions. Let me answer some questions. Okay. Should you have a NICRA even if you only receive pass-through federal funds, and should for-profits also have a NICRA? That's a great question as well. So absolutely, you should get a NICRA if you only have pass-through. Pass-through is the same as direct in the sense, obviously there's different things that you need to keep in mind. However, the pass-through funds are still federal funds. They started there, or you come from the state, whatever it might be. There is still indirect costs associated with it. You still need a NICRA. You still need to do all those things. So absolutely. And as a for-profit, there are many organizations that actually work on federal programs. So having an ICRA, I've actually done them for profits many times, that they provide services just like a governmental organization would do for a grant. So yes, not for profit, profit, everybody should really understand that this is important to understanding what your services are. And as for a for-profit, you can also use that NICRA because you kind of have that backing. It is the generally accepted accounting principle for calculating indirect costs. And so it holds up when you're trying to charge, like when I work with agencies that are working with developers. If you have a cost allocation plan and a NICRA, they very much stop fighting the indirect costs because they know that you followed these guidelines and you've done all of these things. So therefore, they kind of step aside and say, okay, well, you've done this. So now we know that the indirect cost was associated appropriately. But without it, you don't have that information. So you definitely want to always do that. And then, oh, repeating the dates for the ARPA funds. Yes, all funds need to be obligated by December 31st, 2024. So what that means is you have to have POs in place. You have to have everything basically spent, even if the work hasn't been done, but you have to have the contractors and everybody that's going to do it by 2024, the end of 2024, or they take back the funds. Then the second tranche is, okay, now we're December 31st, 2026. If you have not spent all the dollars, so you might be in the middle of a program. If you've not spent all the dollars, they take it back. So know that going in, know that what you start, you need to finish, and then leverage those indirect costs to help you. So as I mentioned, spend the or apply your NICRA on the dollars you've already spent and do that along the way, whether you choose to or not, whether you choose to use it as indirect to reimburse the general fund, or you can choose to send it right back to the program. So know that.
Perfect. Thank you, Nikki. Greatly appreciate it. We're coming up on time here. Tons of valuable information. We can tell by all of the questions that we're receiving, both in the chat box and the Q&A, that there's definitely the need for additional, deeper discussions based off of the facts and circumstances of each individual government. So that is going to conclude our third session of the day. Really quickly, we are going to be launching a bonus poll question right now. We saw in the chat that a few of you may not have been able to get to the 3 required polling questions. So if you can answer this bonus polling question so we can make sure we take care of everything related to CPE, we greatly appreciate it. As that is up, I just want to let you all know that if you have any additional questions related to today's topic, you can reach out to ARPA or Nikki at any time. You can see their contact information on the screen. Again, we value your feedback and ask that you take part in the short survey. We're going to take a little bit of a lunch break now. So our next webinar, the last one of the day, will be at 1:30 Eastern, and we definitely want you to come back. Please don't miss this one. Our friends from Results for America do some really interesting things, around how they're supporting local governments with this evidence-based and database reporting on the federal programs. And so we will be concluding the day with a session from them on focusing on what works, embedding data and evidence into government programs. With that being said, thank you all again for your time, and we will see you at 1:30 Eastern.